through the years, you've kind of achieved in the top, one of the top kind of residential investors of New Zealand in terms of the single family residential side. Have owned up to 80 properties at a time and conducted over, say, 500 property transactions through your career. It's probably north of that at the moment. And you kind of focus more on, say, buying below market value properties that cash flow positively, just to build, say, financial freedom and time freedom in the future. So, yeah, have I missed anything else other than that?
Um, Probably not. That's a little bit of commercial in the last few years, but apart from that, pretty accurate. Yeah.
Oh, beautiful. Very good. Well, thanks for your time and welcome to the podcast. Very good. So just before we jump right into it, I mean, I wanted to get just for the listener's point of view, I mean, for your background as, say, I mean, you're an entrepreneur basically. I mean, have you always had such an entrepreneurial like spirit and thought process, or what kind of career progress have you actually got through to actually get to into the property investing side? I mean, where did it all begin, or how did it start?
I've missed about 10 seconds of that. It just froze. So,
Oh, okay, I'll
just,
go again. So just
all
before
right.
we jump into it, I mean, your career progress as an entrepreneur, how did that all begin? Like, what careers did you start with to get into, say, property investment, or where
Okay.
did it all begin?
Okay. Well, I was a mechanic originally from age 17 um, in Hastings, and then I went to Wellington and worked down there on European vehicles. And when I was a mechanic, I started reading books, and one of them was Bob Jones's book,
Mm,
Jones on Property.
yeah,
That was 1987 or 1988, somewhere around there.
yeah,
And from there, I decided that property was the way to go. I knew I didn't want to be a mechanic forever. Back then, when I was early 20s, I thought 40 was extremely old, and the service manager and there was other mechanics who were that age. I thought there's no way I wanted to be a mechanic at 40, so I wanted to do something different. So that's the start of it, really, reading Bob Jones's book.
yeah. Okay, that's really interesting. Yeah, I've read probably two of Bob Jones's, Jones on Property and his My Property World book. So he's a very entertaining
Yeah,
entertaining writer. So I
yeah,
love his books.
yeah.
Okay, interesting. And then, so once you say you got the property bug and you decided this is, say, the pathway that you're going down. I mean, you did. I read in your book that you lost a bit of money in your first deal, and then what were the next few like your first, like, say, 5 or 10 properties? I mean, what kind of strategy were you going with, or how did that all happen? Were you just looking at trading properties initially, or what? How did that all begin?
Pretty strategy when I started. It was really just to get into property and start learning. And as you say, the first one I made a lot of mistakes on it. I had it for 7 years and made a $40,000 loss on it. So when I was
Mm,
30, I ended up with pretty much zero again.
yeah.
I bought another property in the meantime in Lower Hutt, like a one-bedroom one, which I kind of broke even on several years later.
Mm,
I started real estate in 1994, selling for Harcourts down in Johnsonville.
mm,
And after a year or so, I was earning reasonable money. So I bought a few more rentals. I think I bought 5 down in Wellington.
yeah.
And then got sick of being rung all the time by buyers at night time. And so moved to Dannyburg in 1998. And
Yeah.
I had I sold all my properties and had 300,000 or 350,000, I think, left over, and the house that I bought in Danny was like 80,000 or something. So no job, but that was age 35, I think, somewhere around there.
Yeah. Yeah.
Yeah. So from then, that was 98. No banks would give me a loan at all. So I just
Yeah.
had to start buying houses with cash, which was easy enough in Dannyburg. The first one was only 16,000, which was like a mortgagee sale, and
Yeah.
then did it up and sold it for 40 something. And there was other ones in Paihua, that sort of thing. But most of them were around Dannyburg. And by then, I think it was March 2000, a bank finally said, we'll give you a loan, which was March 2000. And so that was when I was able to start buying again through a bank.
Mm.
Mm.
Wow. Okay, interesting. So,
The- Um, 2000 and 2001, I ended up buying 60 houses just in those 2 years. So
wow.
were trades or the rent to buys, which were called RAPs at the time. So financing people into properties, first home buyers. So, but there were 60 properties bought in those 2 years.
Oh, wow. Okay. So the wraps were basically you would buy the property and then get a first home buyer to pay rent that would rent it off to buy it back from you over a
Uh,
period of
they,
time.
they would pay the mortgage. So I would have a mortgage on the property to a bank, and they would have a mortgage to me. So it was sort of written like a proper mortgage to me.
Yeah.
They would get charged a slightly higher interest rate, about 1.5% to 2% above that.
Yeah.
And the term was never longer than 25 years. My loans were generally 20 years or 15 years, and theirs was 20 or 25 years.
Oh, I see. Okay. So that
And they could
that was
take any time out of that.
yeah. And did all of those did they purchase all of those or some of them defaulted and you ended up buying them back off them or holding them?
Most of them ended up purchasing them. They were able to refinance from the bank, from their own bank, a
Yeah.
couple of years later when there was a lot of equity in there.
Yeah.
And I told every one of them that did that not to extend the term of the loan out or borrow any more money because it was only like about $80,000 or so, but pretty much everybody did.
Yeah.
So, just common money um, concepts where a lot of people, they'll use the equity in their home and go on a holiday or do renovations or whatever,
Yeah.
buy a kind of thing. None of them needed to, and I wouldn't have let them do that if I had still had the loan. So if they'd actually kept the loan with me, they would have been 100 times better off.
Yeah. Very interesting. Very interesting.
Yeah.
That strategy is quite similar, I think, to Steve McKnight, who he bought about 130 properties in about, I think, 3 years, but using that same model in terms of the buy and then kind of mortgage out to the other home buyers. How much money were you kind of making off those? I mean, was it really profitable, or I mean, what?
Not actually. It was probably an average of about $200 a month
Yeah,
per property, the cash flow.
wow,
Yeah. So it
oh,
just helped a little bit cash flow. Looking back now, I would have been better off to trade them and pay
yeah,
tax on that, and then just use them, buy them as rentals.
yeah. I see. Okay, just basically get the big lump of money and then put it into the rentals over there. Okay,
Yeah,
interesting.
yeah.
And so basically, with say your strategy at the moment, you've been selling out of your residential side, and how over the past 1 or 2 years, what's been the shift? I mean, you've shifted into commercial side. Are you still doing that at the moment, or are you kind of just keeping everything at the same at the moment for your portfolio?
Uh, mostly the same, but commercial I started more like 2019, so 5 years ago was the first one I bought, which was only a little shop in Napier, a tiny $280,000 shop, 60 square metre, with a
Yeah,
tenant
yeah,
already.
yeah,
From there, I bought several in 2020 when the lockdown was on. So they settled around that time. And I think I've got about 8 or 9 commercial ones now. I sold the little shop
mm,
a
mm.
couple of years ago. Yeah. So
Look.
this,
I mean, yeah, that's really interesting. So I actually did a bit of did 8 months of commercial sales before I actually got into the residential side. So I understand that kind of all the yields and how it all works on that side. And then I
yeah,
joined up the residential side. So if you were to go back, I mean, would you be looking to maybe do commercial a bit sooner in your career, or is it
yeah,
like
for
what
sure.
you would
Yeah,
you would want sooner?
yeah. I did try to buy commercial properties. Probably 10. I did buy a couple when I had the Mr. Rentals franchise. I bought 3 commercial properties that I had the business in.
Yeah.
plus another one in Palmerston where we had the business there as well. Um, but I also bought another one, which I sold a couple of years later in Hastings, a commercial one, which was just a very, very good buy. But it was very hard to buy them in the first, when I was trying for several years to actually get into it.
Mm.
Just with the agents, I didn't know, and it's probably when you're starting residential, it's the same sort of thing. It's not easy to get into, to
Mm.
actually happen.
Mm.
So, but once once I knew what I was doing, and then formed the rapport with the agents and that sort of thing, then they were sort of chasing me more.
Yeah, I see that. Okay,
Yeah.
so would you say with your investment side of things, do you like if you were to draw like a pie chart of where most of your ones that you bought and bought to hold, I mean, would a large portion come from just good relationships with agents where they would call you, or where would they be? How would that
Um,
pie look like?
Probably around 50-50 with agents and private sales.
Really? Wow. Okay. Um, all right. Your recording has stopped. You've got an incoming call.
And I said, the phone just rang. Sorry. I don't know. I just got rid of the call. Sorry. Sorry, say that again.
Okay, so it's 50% is kind of the agents bringing you. And would you say there's a portion of that that's actually just your own searching on TradeMe in terms of your deals?
No, no. There was very few came from Trade Me. It was more um, back then. It was sort of in the paper. People would advertise privately, and we
Yeah.
had signs up, houses wanted as well.
Yeah.
Buyers to buy privately. So was sort of a little bit like that trade. There was a magazine called Trade Thursday Trader, I think it was, as well, like a little magazine you buy.
Yeah.
Um, so newspapers that advertising as well for properties wanted, and also
Yeah.
ad in the paper wanting to buy properties. I had an ad 5 times a week in the paper.
Yeah.
People don't really read newspapers anymore, but at the time that worked really well. Um,
Yeah.
so yeah, it was probably sorry, it was probably about 50-50 really with agents and buying privately.
Very interesting. Okay, so it's kind of like it is a people business, number one. So speaking with the agents, they bring the deals through because they can smell one out and they know where it is. So it's kind of you leveraging off that leverage of what or who they know,
Yeah,
which rather than just single filing going one by one on TradeMe.
yeah. No, I don't know if I actually bought any off Trade Me. I don't know. Not that I remember.
Wow, interesting. Because I speak to other investors. That one investor, he's bought about 17 properties around Auckland. I mean, not Auckland,
Mm.
around the whole of New Zealand, and he's only bought on TradeMe. So
Yeah, well, it's
interesting.
something I'd never really looked at, but probably because it was quite time consuming. So I'd rather advertise and get people to ring me rather than me doing all the research. But if it works, and it does, then that's a good way as well.
Yeah. So you would, and the private ones. I mean, you'd have to go see them in person every time to go to the property, view it, shake their hand, and would you ever buy
I
them
would
like sight unseen?
I would probably go to 50% of them
Yep.
because often people would ring and they'd want way too much. So I would just have a look at um, what I thought they were worth beforehand on Property Guru, or talk to an agent or two, that sort of thing. Um,
Yeah.
but most of the ones I went to, I would buy. So I'd already had quite a good idea of, if it was going to be a reasonable deal or not, and then just negotiate something there and then with the buyer,
Yeah.
and then contract and buy them like that.
Okay, very interesting. So your negotiation, I mean, you just put them through a figure right there and there. They would come back, and you just kind of horse trade it right there and there.
Oh yes, yes. Most of it was done on the first meeting. Yep.
Okay. And how would you approach the negotiation? Like, I mean, were there any strategies in terms of pricing that you'd start with, like anchoring, or how would
Uh,
that, how do you go about that?
well, there's a bit of a negotiation part in my book, the first book, where I talk extensively about that. But it's a big topic really, negotiation. But It's more like asking them what they're wanting for the property,
Yeah.
their motivation, why they want to sell it, and that sort of thing. Sort of getting to know the whole story before any numbers are brought up. Um,
Yeah.
if they want to do a longer settlement, a shorter settlement, if they have to be out by next week, or if it's a separation, there's so many different things. But then
Yeah.
asking them again um, in a different way what they would take, and then if it was settled quicker, would you sell it for less, or that sort of thing. And if it was a cash offer, how much would you take? And then before I'd say any numbers at all, so I'd sort of get where they are before I would actually say a figure.
Yeah, I see. Would you write the figure down on paper, or would you just verbally say, look, I mean, this is where we kind of see it around this point,
Uh,
and what your thoughts are?
just verbally, because until it's written down on a contract, sales and purchase agreement, then it's not valid anyway. But I would
Yeah.
generally get those done the same day, and then send those off to their lawyer. Generally, they not always, but sometimes people wanted to run it by their lawyer first, and other
Yep.
times I would just say I'll just get the agreement written up. I'll just write it up myself, and then
Yep.
pop back to you later on. Or sometimes I even have an agreement in the car and do it then.
Yeah, yeah, that's very interesting. I think I was trying to do something similar to that before I joined residential real estate. As the market was peaking, I had a business friend, and we were sending out about 2,000 to 3,000 address letters per week. We had a letter folding machine that would fold envelopes, put a page in an envelope and seal it, and then we kind of would grabbed all of like owners' first name, last names over the I think Property Guru, and we were
Yeah,
getting up 20 to 40 phone calls a week that were coming in of potential
yeah,
sellers. But we were kind of like very wet round the ears in terms of negotiating, and we're doing a lot less meetings in person and more just on the phone. I mean, we bought 3 deals like that, and bought and did some concept plans and sold it to developers.
yeah,
So just the trading side of things, but we just didn't have the systems. Or I was very like nervous, not very good at sales. So that's kind of partly why I've joined as a real estate agent, to actually get better at that negotiating side of things. So it's quite interesting to hear how your strategy, kind of that in-person meeting, hear about, talk to them, and find out about that, to actually then give them what they need, so that it kind of works with you as well.
yeah. Well, that's what sales is about, really. Just understanding what they want and why they want to sell, and then just sort of focus on those points, which is going to relieve their pain.
Yeah, yeah, that's very interesting. So let's say an investor like myself, or someone that's got maybe say $250,000 in the bank, and they're looking, they want to buy some property. I mean, what would you be? They've read your whole book, and they're having a look and saying, where should I be looking at? I mean, what would you be advising, and say this is the
Well,
location? Or
if it was me, I'd be buying in Hawke's Bay because it makes sense generally.
yep,
Um, if you can get the good yields of at least 8%. If I lived
yep,
in Auckland, then I would also try and buy there first, to
yep,
see if I can buy something that's got an 8% yield or above gross
yep,
yield, um, as long as the area is not too bad. Because you
yeah,
might buy something that's in a really, really dodgy area for 8%, but you want to be able to go to a place where um, you feel comfortable walking around in the day and that sort of thing. It doesn't
mm,
not too dodgy.
yeah, yeah. So kind of that mid-range, that okay area where it's not too dodgy there.
Yeah, probably slightly lower, but not too low. Where
Yeah,
some people do buy in the worst places, which would be a strategy if you were trying to build something fast. You get higher risk, um,
yeah,
and more hassles potentially.
yeah,
So if you want to build a portfolio fast, you'd probably you might go for a 9-10% yield, but have to be prepared to deal with worse tenants and potential issues
yeah,
damaging. So
yeah.
really what you're
So you,
comfortable.
yeah, I see that. So you wouldn't look at any towns that were like smaller than say 10,000 people or 20,000 people? Would you kind of
Uh, And if you lived in one of those towns, you might want to buy one or two, like if you knew the town well. But for
Yep.
me, anything under about 100,000 population, long term, like if you want to build, 10 properties or more, then I wouldn't go below 100,000.
Yeah. And is that mainly because it's just the risk of the town is just
Yeah.
quite high? There's never
Yes.
momentum.
Yes. Yeah.
Yeah, I see that. Yeah. Okay. That make because let's say the town's income is all based on mining, for example. Then the mining dries
Yeah.
up, and then suddenly they can't. Then the town's gone,
Yeah.
and then your revenues drop 50%, and now you cooked.
Yeah. We don't have mining here, but there are some small towns with bigger industries in there, and it can affect jobs and that sort of thing. It just brings more risk into it if you have a very small population. It
Yeah, I
may,
see that.
but it may still work. But, I just prefer the bigger populations,
Yeah. Okay, that's
but not
really
too.
understood. Yeah. So I work as a real estate agent now, and we've sold about 70 properties with my team in the last 12 months. So it's about my second year at the moment. So we've scaled up really quickly
Mhm.
in this market. But I'm putting in maybe 70 hours a week into work. So it's a lot of time investment. If I was to be looking at property investment, I mean, what would you have any metrics on? Okay, you got to put one offer a day, or what metrics? Were any metrics that you'd be recommending, or how would you track, or in terms of looking
Not
at deals?
really a matter of how much time you can put into it. It's not about the number of offers you put in, because you might put in 100 offers and get one property, or you might, you know, narrow it down to say 10 properties that make more sense, that look like good potentials, and then buy five of them. So it's about
Yeah,
using your time wisely, and rather than just putting out a whole lot of offers needlessly. You want
yeah,
to, before you put any offer in, you want to make sure there's a good chance that you can buy it, like the ones that I've mentioned before with the private sales. Same with agents as well.
yeah,
The rapport you have with an agent, after a while, you get an idea of what the vendor's motivation is and what they're going to take and that sort of thing. So rather than just saying there's 50 houses you've got, I'm going to put an offer on every one of them, you're just going to annoy everybody. So you want to be have a better than 50% chance, really, I think, when you're going to make an offer, that it's going to work.
yeah. I see, and that's finding out exactly what say the price point. Okay, so
Yeah.
you're not wasting time putting offers on where the 100K gap, and it's just not
No,
feasible. You're just
no.
looking at.
Yeah, I don't want to waste my time or the agent's time, because everybody's time's valuable. So, but other people do. They'll just put out a whole lot of offers, and you know, it's just probably good for experience of writing up offers, but it's not necessarily the best way to do it.
Yeah, so that's just taking more of a sniper approach than a machine gun approach.
Yeah, yeah, yeah,
Okay, that's quite interesting. So it's focus on rather being time efficient and focusing on, okay, I'm going to allocate 1 hour a day into doing this, and then rather focusing on that and finding the right deal for the right offer, rather than, okay, let's just put one
still,
offer a day.
still, still, the more time you put into it, the better. But
Yeah,
as I say, you just have to be selective as to when you do make an offer,
yeah, mm,
right? So you might put in. It all depends on what you're wanting to achieve, really. For a lot of people, you might buy one rental and then you're sort of stuck for a couple of years,
yeah,
right?
yeah,
So it depends on your strategy and what you're doing, and whether it's trading or you know um, if you're selling them on to other investors or whatever you're doing.
yeah, yeah. Understood. Yeah, I'm probably looking at, say, more buy, renovate, refinance.
Yeah.
That's what I'd be looking at right now.
Hmm.
Um, And would you be looking to try like buy a deal where you could potentially finance up to 80, or refinance 100% of your money out the deal at a maybe 70% LTV?
if you can do, but it's harder these days. Yeah, it is more difficult these days than when I did it in 2014, where I would put in, well, I'd borrow the full amount, and the bank would still only give me 80% of the value, but valuations were high enough that 80% of the new valuation was basically 100% finance or more anyway.
Yeah, I see. Yeah, so that was you kind of use that leverage on when you bought the 20 in 1 year. It's just you'd
Yeah,
buy them 20% below value, bank would refinance, and you'd be able
yeah,
to get a cash neutral position
yeah,
over there.
yes, yeah.
Mm. So with all of these investments that you like, let's say you're running numbers on the deal. I mean, are you doing more back of napkin, or do you have a spreadsheet that you work it out on, or how would you work out the figures on these?
For a rental,
Looking out to buy, when you're looking to buy a property, so would you just do in your calculations in your head, or would you have a spreadsheet, or
no spreadsheet. No, no. Well, it's only the rent, annual rent divided by the purchase price. So it's all pretty simple, really. If
yeah,
if you can't work it out in your head, then just use a calculator to do that. And you really want the yield to be 8% or above. So if you already know what the rent is and it's sort of at the maximum, then you've got to work out what what you can pay to make it 8%.
yeah, I
Like
see.
it
Okay,
asks, it might be 7%, for example, and you say it's 500,000, for example, but it had to be 440,000 to make it 8%.
yeah,
Right?
yeah,
Like if the rent was already where it should be, market rent.
mm,
Yeah, so you'd have to work out where you can buy it and then talk to the agent. Is it possible? Do you think they, is the motivation enough there that we could buy it for 440?
yeah, yeah. And would you have a calculation based on the 20% below market value? You'd say, okay, well, I want to try and get this 20% below
No,
market value.
not if it's a long-term hold. No, no. That was only really for the refinancing experiment that year. It's
Yeah,
different.
yeah.
Yeah,
And in terms of a buy, renovate, refinance, then you'd have to look at the refinance, how much you could pull out, essentially.
yeah, yeah. You're not going to pull it all out because what is the deposit now to buy rental? Is it 30% or 40?
Yeah, 30%. Yeah,
30%, yeah. So you'd have to buy 30% below, which I don't think any of those, maybe one of those properties was 30% below.
yeah,
So, yeah, you'd still use some equity.
yeah. I see. Okay, so it's kind of you'd say the 20% is that's kind of the achievable zone at the moment.
I would think so, yes.
Yeah,
Yes. It's possible. It is possible. But I
yeah,
think it's a lot harder than the 20%.
yeah. Okay, so 20% is a good goal benchmark to be aiming towards. 30% would be a bonus.
Yeah.
Okay, very good, awesome. And with like, how would you be looking at quite a lot of different properties at one time, or I mean, how would you keep track of all the properties you're looking at, or is it you wouldn't look at like over a week or two? You wouldn't. How many would you be like really going quite in detail to?
Are you talking about 2014 or a different time?
Yeah, let's say 2014.
Um, well, I only bought 20 that year, so it's only like one every 3 weeks or something.
Yeah,
Um, some of those were bought privately. Some were, a lot of them were through agents, but the agents would call me. I don't know if there's a specific amount I would look at a week. It was just when something comes available,
yeah,
then I look at it. So, and it had to be it had to be in that criteria where I could buy it cheap, and
yeah,
then add value to it, or just get it valued at the 20% above what I was paying for it.
yeah. I
So
see.
I didn't really look at it as a numbers thing because the original intention was to only buy 10 for the year, just to buy 10,
Yeah,
which I put in the book. And then by July, I'd already bought 10. So I talked to the bank, and he said, well, your position now is stronger than was when you started.
Yeah.
So you can do as many as you want. So that's when I thought, I'll see if I can do 20.
Yeah. Oh, that's really good. That's awesome. And let's say a normal property investor's got a portfolio, they're building their portfolio. How would they kind of balance let's say they want to refinance it and the property market all increases. I mean, how would you balance refinancing versus actually just paying down the debt? Like what kind of balancing act would you be having with the portfolio? Because most people would refinance all the way up to the full maximum, but that would increase their risk. I mean, is there...
Well, there's a good article I wrote about LVR in the book, and it's basically saying, I don't remember all the numbers now, but if you've just got a couple of $1 million of property, you can, probably go up to 80% or so. But the higher the value of the properties, then that LVR needs to come down. So I put in there like quite a good guide as to where your LVR should be. I haven't got it on. Oh, I could probably have a look if you want me to.
I've got the book over here, so I might be able to find it over here. I think it kind of it might have ranged from about 70% at 80% at 1 million, then down to 70 at 2 to 3 million, 60% 3 to 4 mil, and then maybe 40% if you got 10 to 20 mil.
So on page 110. So so up to 1 million, I've got 80%. 1 to 2 million, 70%, 2 to 5 million, 65%, 5 to 10 million, 60%, and then over 20 million, there's other ones as well, over 20 million, 40% or less LVR.
That's very interesting. So what's say your LVR at the moment with your portfolio?
Right now, I'll just click on this little thing here. It is 23%. 23. And that's about $40 million worth of property.
That's pretty good. That's really good.
Yep.
And through your buying career, I mean, I read in your book that you had one case where you had your I think it was your appendix removed, and then you went on a spree buying $6 million of property over 2 months, and then it kind of you put a bit of negative gearing. I mean, was that kind of one of your major setbacks that you've had, or we've had any other bigger ones than that?
That's probably the most memorable one. Yes. I think I bought about $6 million of property and more cars as well. And for a while, I was going backwards $70,000 every month. So
wow.
It was 2005, October 2005, when the appendix burst, and it was burst for 48 hours, and before they said that it was the appendix, because I'd gone in hospital the previous day and they said, no, it's stress. And I thought, well, I'm not stressed at all, so I don't think so. But anyway, they sent me home. So when I did get back in, they said, we have to operate now. If we don't, you'll be dead within half an hour, pretty much.
Oh, my goodness.
Yeah, so it got reinfected, and they added so much morphine and antibiotics and stuff for a couple of months, and it was just, I only needed an hour's sleep. It was just such a high that I just went out, broke pretty much every rule.
Oh, wow. My word. So that's your kryptonite, all these morphine drugs and then buying property.
Yeah, well, I don't drink alcohol, so I don't know what that's like, but it's probably similar. I don't know. Being in that state where I only needed an hour's sleep every day, and it was just like being on a total high.
Wow.
But anyway, this happened, and I think I probably lost $1.5 million over the next year, and had to sell 20 properties to get out of the ship.
20.
So,
wow.
Yeah, because I think I had 60 at the time. I got down to 35, but I must have got down to 40-ish, and then separation occurred a couple of years later, and I had to sell some more to get out of it, to do that as well. So I got down to 35, by about 2012, 2011, 2012.
Yeah, yeah. Oh, very interesting. Wow. So do you all of these properties? I mean, you've got a property manager sorting them all out, or do you self-manage them?
All the all the residential ones are property managed
Yeah.
in Hawke's Bay, and the commercial ones I generally look after them myself. But long term, I may get them managed. But
Yeah.
fairly easy to manage myself at the moment.
Yeah. Yeah. Understood. So I was having a look at your recommended books, and I read the Wink and Grow Rich book. I've read that about two or three times
I've read it
already.
10. Yeah,
10. That
yeah.
book is that's a very very interesting book. Like it's think it, ink it, do it, review it. It's such a simple good book.
What
But
comes after 29?
pardon?
What comes after 29?
I don't know. I think it's just got to do it. What does come after 29 for you?
Who knows? Because I rang Roger when I worked it out. He said yes.
Really?
Yeah, yeah. He was involved with us with another business for a few years in New Zealand Wealth Dynamics.
Yeah.
So
Yeah.
we sold a lot of his books, about 1,000, I think. Those Wink and Grow Rich books for him. But it was a very very good book.
Yeah. Yeah. So what does come after 29?
Can't tell you. Sorry.
Fair enough. I'll have to read another eight more times, I reckon.
Most people will never get it. It was actually when I was in that heightened state that I got it in
Really?
2005.
So what? I mean, is it not worth it to tell people what comes after?
No,
It's not.
no, because it won't make any difference.
Okay. What's say the most favorite part about that book that you like?
Uh, well, it's just the story, really, the story of it,
Mm,
and the different wealth profiles as well that are all in there.
yeah. Yeah.
Um, yeah, I just think it was, and when he wrote it, he was up in the Himalayas by himself for 3 days. He wrote it in that time, just nobody else around, just all sort of got downloaded to him, kind of thing.
Wow. It's almost in a meditative state writing that book.
Yeah, pretty much. Yeah,
Yeah, that book is really special. You pick out a new nuggets of gold every time you read it.
yeah, yeah.
Are there any other like top books that you would that you comes to mind that are kind of your top?
Depends if you're wanting property books or mindset and that sort of thing. And I think they're all sort of listed in the book. I don't think there's too many I could add to the ones that you know aren't listed there.
Yeah, yeah, yeah. Understood. With I also quite enjoy looking at all of your. I mean, you're trying to balance a healthy lifestyle with the property investing side of things. I'm personally training to try and run the Blue Lake Challenge in Rotorua. So you run there's a 5 kilometer loop, and I think next week there's about 200 people that I'm going to join up with, and we're going to try and run 100 kilometers in like a 24-hour period.
Oh, so 5Ks each.
Yeah, yeah.
Is that
So
around the Blue Lake or?
yeah, Blue Lake Challenge.
Oh, it's nice through there. So you got a little bit of road, and then the rest through the trees and stuff.
Yeah, yeah. So it's quite a nice scenic route. So
Yeah, it is.
I think
It's
one yeah. So I'm going to try and run 100 kilometers around that loop.
right. Are you
I
going
got
to
it.
do it yourself though, or is it?
Yeah, I'm doing it myself. Yeah,
Oh, you're going to do 100Ks.
yeah. I did 55k training run 2 weeks ago. So I've been doing about say 80 to 90 kilometers running over a week. So that'll just be like one day doing 100 kilometers.
Why?
Yeah, so 100 Ks in one day, maybe 14 hours. That'll be the goal.
Why do you want to do that?
More of it's a personal challenge, and just kind of breaking out my own like it like I think it's fun, number one, and also just a personal challenge because
Okay.
by doing things that are very very tough and kind of it expands your mind into what's really achievable with the human mind and human body. So it's more of just a self discovery and interesting and fun challenge.
Well, if you do 10 kilometers an hour, you'll do it in 10 hours.
10K. All right, I don't think I can do it in 10 hours. I,
Walking a fast walking speed 7 kilometers an hour, which would take you 14 hours.
yeah.
So
Yeah, I
even
did.
8
I
kilometers,
did.
which is just over walking pace, then that's 12 hours.
There is about 100, I think there's about 100 meters of elevation on it. So up and down.
All right.
So you've got 100 meters. So you do have quite, you're going to have to, it's about a kilometer worth of elevation as well. It's included at
Around
the
the
top.
Blue Lake, though.
Yeah, I think so. Yep.
It's not, there's no real hills on there that it's very, very minor.
I'll double check the course route.
It might be something different, but it's pretty flat most of the way. You just
Yeah.
got the tree roots and so on if you're running it.
Yeah, yeah, yeah. I did with a training run. I ran about 55K in about 7.5 hours, which was 2 weeks ago. So
That's good. So it's 8 kilometers an hour.
yeah, about 8Ks an hour. Yeah. Are
Yeah.
you still doing up Tomato Peak? How's your
And
hiking going?
I take the dogs on a more of a flat walk these days. Sometimes still go up the peak, but I do yoga probably an hour a day as well.
Oh, that's really good.
So yeah.
And what just as we kind of like wrap up on the last question and over here, I mean, what are your like say 5 years looking at in terms of what are you looking to achieve or what's any plans ahead over your
Yeah.
portfolio or
Well, I did start. I think I mentioned earlier sometime to you that I want to sell the 20 that I bought in 2014. So I've only
yeah
sold 4 of those this year. The break costs now are huge because I sort of locked in for 2 years almost to the mortgages on some of the bigger commercial ones. So the break costs are up to like 4,500 per $100,000 loan.
yeah
And the market's still quite quiet here, so I will sell the other 16, but it'll be over the next couple of years, and
yeah
then should get rid of pretty much the debt on everything, and then there should be good cash flow of 130, 140,000 a month, I think,
yeah
from there, and obviously there's tax to pay on that, so it's quite a big chunk of tax. But I would most likely just buy another commercial building for say $1.5 to $2 million or so, and then finance it over 3 years. There'd be enough money to do that, with the income from the tenant as well. There
yeah
should to buy a free, buy one freehold every 3 years or so.
yeah yeah I see yeah okay and then it's just plug and play just live your life then
Yeah, well, nothing's going to change from how we are living now anyway, because it's still got good cash flow now. So nothing's going to change too much, really.
yeah 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 very good very good. So yeah, Graham, I really appreciate all the time and the effort and thanks for going through all the questions myself. I mean, do you have any further points to raise or any questions for myself that you want to
Yeah.
chat about? Or?
You did mention something about Auckland capital gains. I'm not sure if it was
Yeah,
on an email or somewhere.
yeah,
But if you look back 60 or 70 years, say 60 years, the relation to properties in Auckland, Christchurch, Wellington, Hawke's Bay, Invercargill, Wanganui, Palmerston North, Rotorua are still pretty much exactly what they were back then. So I have no idea where the false belief that people think Auckland has better capital gains than everywhere else, it doesn't. So the
yeah,
only exceptions really are to small towns, which don't really relate to the other ones, like under 20,000 people or so. But if you've got a population of 80, 90,000, like Rotorua, Hawke's Bay, places like that, if you look back that many years, the correlation to what it is now compared to then, it sort of goes up and down a little bit. But, I've seen the stats and I've showed them in seminars many times, and people still don't get it that Auckland's no different to anywhere else. And also the place where I live, for example, like there's Havelock North, which is where we live, which people say, well, if you bought in Havelock North, you'll get better capital gains than you would in Flaxmere, right? Which is where the rentals are. But that's not true either.
Yeah.
So it's not true. So the correlation between where those properties are and where we are is still the same as it was 50 years ago as well.
I see.
Right?
Interesting.
Because otherwise you'd have the properties that are out there, which were, say, $20,000, and houses in Havelock were $45,000 or whatever the relation was. If that was true, then properties in Havelock would be $1 million and the other ones would be 60,000. It's just, it's just not accurate. So when I find those ones in the book, the prices in Flaxmere were 100 to 140-ish, depending on the deal. And now they're sort of 400 to 550 or so. And the market has dropped from where it was a couple of years ago as well. So don't ever let anybody tell you you're buying there because of the capital gains. And also, I don't know why people would buy for capital gains anyway. So that's where I think most people go wrong. They're buying in the hope that prices go up. I buy expecting the price to go down. So you want the cash flow to be the important thing, not what the price of it's doing. And people generally who are buying in Auckland will finance things on interest only. So it's more, what's the word, important for them that the price goes up, and that's what they focus on. Because otherwise they've got the exact same debt as they started from. They're no better off. So if people bought 3 years ago, 2021, when prices were maybe 10 to 15% higher, they've actually gone backwards by that much because they think prices are going up.
Yeah, 100%.
Yeah, so if you have to buy it on interest only, I would say do not. Look for another property.
Yeah.
Because when people start, they think, well, I'll change that later on. But generally they don't. And they'll say, I'll pay it off here with other money, but they generally don't. So there's only a very few people that I know who have done successfully investing in residential with interest only, and they generally will buy a lot more expensive properties. So properties, when I was buying for 100 to 200, they were paying $1 million to $1.5 million for big complexes with very high cash flow. So it didn't affect them as much as, if just trying to buy a 3-bedroom house interest only. And if you remember from the book as well, a lot of the properties that I bought were from investors because the market was still very, very slow, 2014. Our prices had dropped 30% since 2008. So the price has gone down, 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 down. Interest-only investors got disillusioned with the whole thing and made huge losses because all their equity had got eaten up, right? All their original 20% or whatever they put in was gone, so they had zero. So they thought, I can't go much below zero, so they sold, and which is how I bought so many, good deals. A lot of it was from other investors.
Oh, I see. Okay, interesting.
So that's why I say yes, your strategy and your foundation has to be strong. If the foundation wasn't strong when I had that appendix thing in 2005, then I also would have got wiped out totally easily. But because
Yeah.
the equity was there, I still had 50% equity or so in the properties. I could take $1.5 million loss and still be okay.
Mm.
It wasn't
That,
nice, but it was still okay.
that's I think that's really valuable information just to focus on having that strong foundation. And I think people get too hot-headed at the end of the day with real estate and over leverage themselves, and then not think about the risks and not remember what times can potentially happen with the market dropping, and then they
Yeah,
other
going
said
up.
they lost 99 properties had to sell them all.
Say that again.
One investor you wrote about in the book said he had 99 properties, and then the market
Yep.
dropped and he had to sell them all, lost
No,
everything.
they lost everything.
Yeah.
They lost everything. There was the bank, though. The bank had changed the rules or something, but they did lose everything.
Mm.
Yeah. So if you can't refinance easily with another bank, also like people with second tier lending and so on, like if they called in the loans or something and you can't finance with a normal bank, it's again very, very risky.
Yeah. Yeah. Well, thank you for sharing all these gold nuggets. We really appreciate your time, Graeme.
That's okay, Lawrence.
Very good. Well, look, we've been on 52 minutes. I've finished all the questions that I need, but thanks for your time and really appreciate the knowledge. And I'll definitely make a few notes and have a look around the Hawke's Bay area. Look for those 20, hopefully 30% deals, but 20% will be a good goal to look at.
Yep. Great. Thank you very much.
Very good. Have a good rest of your day. Keep in touch,
You
Graeme.
too.
Thank you.
Yeah. See
Thanks.
ya.
Cheers. Bye bye.
Yeah.